Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, June 9th, 2026. I'm back from a long weekend and we're yet again watching headlines out of the US and Iran. But in today's video, the main focus will be taking a look ahead to tomorrow's highly anticipated US CPI report, including some of those key leading indicators. Let's get into everything that you need to know ahead of today's US session. So yesterday we saw news around a sort of fractured ceasefire between Iran and Israel that is still benefiting risk appetite, with U.S. indices edging higher, oil on the move lower, down about 2%, and the U.S. dollar also in retreat by about 0.3%. Saw an interesting headline this morning that President Trump said we could have an Iran deal within the next few days. If it sounds like you've heard this before, you indeed have. In fact, CNN has reported that President Trump has said a deal would be imminent 37 times over the past month or two here. So it's not just your feelings. We really are seeing a bit of optimism, if you will, here. But markets are mostly focused on action, and some of those comments here indicate a move toward peace, but not necessarily something that they're going to take to the bank yet. We'll see if that indeed does play out. Spinning it forward, tomorrow morning we will get the US CPI report, a key measure of consumer inflation in the US, and it's expected to rise sharply 0.5% month over month on the headline basis, which would bring the year over year rate up to 4.2%. That would be the highest reading we've seen in over 3 years now. The core CPI reading, which is a better proxy for what the Fed is targeting, is also expected to rise 0.3% month over month, bringing the year over year rate to 2.9%. That would be about 61 months since the last time the core CPI reading was below the Federal Reserve's target. So clearly entrenched inflation is a problem, and that's something that could push the Federal Reserve to raise interest rates, especially after the strong jobs report that we saw on Friday. One of the best leading indicators that I've found for CPI is the average of the prices between the manufacturing ISM PMI survey and the non-manufacturing ISM PMI survey. Here in green in this chart, you can see it's been spiking, not surprisingly. In recent months, it did edge just a tick lower over the last month, but you can see, at least by this measure, there's still some catching up for the headline CPI reading to come. It could be as high as 5% or higher in the coming months based on at least this one measure. And then today's chart of the day is the euro versus the US dollar. Here on a daily chart, you can see it had been trapped in a tight range for 2 or 3 weeks, about 70 pips there between 116 and 116.70. On the back of Friday's jobs report, we broke lower, showing strength in the US dollar. Now that move is partially unwinding. We're bouncing off about 115, but as long as we remain below that 116 level, that was a key level of previous support or a floor under prices that should now provide resistance or a ceiling on prices, then the bias is going to remain to the downside again below that 116 level. Meanwhile, to the downside, 115 is now support after putting in that low yesterday, and if that level gives way, we could be looking further down toward 114 in the world's most widely traded currency pair. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do drop a like on this video. It's a great free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trades today.